Yes, guys, and welcome back to the BrokeCast. We're on episode 9.
Yeah.
We're on episode 9.
Yeah, I think it's fine.
And yeah, so this week we're going to go over. We'll start off, I think, by discussing some news, some crypto news. Really briefly, there's not a lot going on. You probably all heard what's going on right now, and I feel like this is going to be the narrative for the next month or so now. So this tends to happen. But yeah, we'll go over that. Maybe some thoughts on price action, and then the bulk of this episode we're going to concentrate on the macro environment. I think it's the best way to describe it. We'll be referencing a lot to Arthur Hayes, i.e. the GOAT.
Yeah,
His article, read it yesterday.
One of the GOATs.
One of the GOATs. Read his article yesterday, absolutely amazing article. Go ahead and read it. I'm going to link it in this description anyway because it's great insight.
All his articles are pretty bang on.
He's such a clever guy.
And the thing that I like about his article specifically is that he gives a perspective like out of Asia.
Yeah.
Because obviously he's lived in Asia, what did he say, 19 years or whatever. Yep. So to get the perspective out of that side of the world is that invaluable for us in the West.
Yeah, it's awesome. But yeah, we'll go into it. But starting off with news, Binance still really dominating the headlines.
Yeah.
I just feel like, when there's a big event in crypto, it's going to dominate the headlines for about a month now until people kind of don't care about it anymore or get sick of hearing about it. This is a reoccurring theme. FTX collapse, how long did we hear about it for? Months.
I still hear about it now.
We still hear about it now. So
but I feel like they're longing it out.
It's
not really affected the price, but every single day they just use it for a clickbait title.
That's what everyone's doing right now because there's not a lot else really going on within the space right now.
Waiting for the approval of the ETF, really.
That's what I feel like. That's the only thing. The two things that are kind of going on within crypto specifically anyway is just ETF or flooding Binance, getting some additional clicks out of that.
Whilst the price just slowly grinds up.
Yeah,
it's obviously up and down each day, but if you actually take a zoomed out perspective, what we're at now, like 38k.
Yeah, 38k, no major capitulations.
Actually think about 38k, $38,000 Bitcoin, that's where we're at right now. Like no matter what FUD headlines, whether you think it's coming down, people are making you panic or not, we're at $38,000. Take us a year ago, we're at 15,500.
Had catastrophic news this time last year, obviously just at the start of the month, but this time last year we're at $15,000, major bearish news, and the world was falling, the sky was falling. And this year, fast forward a year obviously, 38k, still obviously bad news, I guess, if you want to. It depends how you look at it. Obviously, we discussed this in last week's episode. We still think it's a net positive, but we've had this bearish news come out, and we're at 38k, and there's been no major capitulation. So there's a big contrast there. Yeah,
the difference is now is we're at 38,000. There's uncertainty all over, which obviously gives us the sentiment, space to be able to go up.
Yeah.
But the road ahead is potentially paved for a massive bull run.
Yeah, definitely.
And that could happen at any time. I say it could happen at any time. It's already happening.
It is happening.
It's already happening. It just doesn't look like it. The point I'm trying to make is that we're at 38,000 now, and we're at 15,500 a year ago. In 3 years' time, you're going to go back and look at the charts and think, oh look, if you look from that time to that time in that year, Bitcoin price rise from 15,000 to 38, 150% in a year. You'd be like, wow, that's actually a big gain. But sitting in the time period, you're thinking to yourself, nothing's really happening and it feels pretty footy.
Yeah, definitely.
But you're up 150% if you bought the bottom last year.
Yeah, that's always the case, isn't it? When you look back, you can even do it now from the previous cycle, previous bear markets. It's the exact same thing what's going on right now.
You can do it now for the last 3 months.
Yeah, exactly.
Go back 3 months, we're at 20 odd K. And when you're around 20k, everyone was thinking, 28, 27, 28k, everyone was like, we're definitely coming down to 24k. Without a doubt.
Yeah.
2-3 months later, we're at 38k, we haven't touched 24. And whether we do go back there, time was going to tell, but I don't know, people sitting in cash just must be starting to get twitchy thumbs right now.
Won't be sitting in cash right now, mate.
No, I can't say I would either.
Yeah, cool. But in terms of crypto news, what's gone on this week? Argentinian president, he's been pretty much obviously elected last week, and he's already come out and stated plans that he's planning to shut down the central bank of Argentina and potentially go into a digitalized dollar kind of system, or who knows what system he's going to adopt. That's not really been made clear, but it's been a week and he's already stamping his authority on the Argentinian economy.
It's been a bit weird though, because like the guy who he tried to elect for his head of monetary policy like rejected the position, and then he's been meeting with like WEF people. So I don't know. Like, let's see what happens there. But
yeah, he's in America like right now, I think.
Yeah.
He obviously went to America for a couple of meetings with some. I think obviously partly with the Biden administration and then with other people as well. So it'd be interesting to see what comes out of it. They're probably going to try and tell him not to do what he's doing, but we'll see. We'll see what happens with that. I guess it's not really major news, but
no, not really. We're going to talk about like another visit to the US with like Jinping and Biden in the next part of this.
That's the next part, to be fair.
More news. Last night we went to the launch of M2 Exchange.
Yeah, it was. It had. Look, I'm not gonna. It was an absolute pleasure to be there.
Yeah, do you want to explain what it is first before we talk about the actual event?
Go on, I'll let you do that.
Okay. M2 is a government-backed crypto exchange. Excuse me.
Excuse me.
M2 is a government-backed crypto exchange out of Abu Dhabi, obviously in the UAE, one of the Emirates of the UAE, just like as Dubai is another Emirate. As I said, yeah, government-backed. They are trying to, supposedly, like we don't know loads about them, but they're trying to create like an officially regulated crypto exchange. Kevin O'Leary was there last night, and some big players in the space. Charles Hoskinson was there. We got invited to go, which was very nice. Treated us very well, which Pav's going to get into in a second. But they're just basically an exchange that are going to offer regulated crypto services, supposedly. They have their own token. MMT token is what I want to say it is, but I can't really remember. They're launching their own stablecoin. Some of the announcements last night where they've got 5 regulatory licenses already, 2 in the Bahamas and 3 in the UAE, and they're going to be getting 1 in Europe in the next coming months, they said. They're offering big yield on cryptos at the minute, on like Bitcoin and ETH. I think it's like 10.5%, and on USDT 11.5%. One of the things that we touched on, all of us have been looking at, maybe some alpha, but obviously not financial advice, is their token is currently at a market cap of 500 mil. OKX's exchange token is at 3.5 billion, and Binance BNB exchange token is at like 30 billion. So there's potential of like up to a 60x there if they start to take some of the volume of those exchanges, if the platform succeeds and is legit. Like there's always issues and teething problems at the start, but it's got as much chance as anything as they're backed by governments, in my opinion. But I'll let Pav go on to.
I mean, look, it's looking promising, I think, for M2. Obviously, they're in the very early stages of the exchange as a general project. I think it was only last year, the CEO stated last night that it started with a handshake, literally last year. So they've moved very fast in a year. And I guess time will tell whether they will succeed or not. But from where I'm sitting, they've got a really good chance. Got some big names behind them. Kevin O'Leary, I like. Obviously, he's on the payroll, but you know they've got a lot of backing in that kind of sense. It shows gives them a bit of credibility, I think, within the space. Government backed. There's a lot of money behind it. I think people just need to do a bit more research on their like tokenomics and like their proof of liquidity, or proof of funds, all that kind of stuff, which is crucial that you have to do. But like you said, 500 mil market cap, OKX sitting at 3.5 billion. We've had this negative news come out with Binance. Does this give them the perfect opportunity to eat some of that market cap up? Yes, it definitely does. They've got very pro-regulation kind of going on. They really emphasised that last night at the event. They want to work with regulators across the world, not just here in the UAE, but across the world. They're trying to be as compliant as they can, which I think is the best thing that an exchange can do right now, is to avoid falling under the same kind of, not trap, but stop them from experiencing what Binance just experienced, basically. But yeah, it's looking good from the standpoint. Obviously, couple that with the fact that Dubai and other UAE kind of states are really pro-crypto.
Yeah, well, like Ras Al Khaimah last month announced their RACDAO, which is the first like free zone area that people can set up companies specifically within cryptocurrency. So
they're already attracting all this kind of like clientele, pro-crypto clientele. Obviously, we've moved from the UK to here. They're attracting all this, the right kind of demographic, let's say. And now they've got a platform which, if they execute their business plan correctly, we're all going to jump on, because it depends how you can on and off ramp fiat, but if they do execute it, like I said, they've got potential of just absolutely scaling at such a fast pace.
Yeah, because like we were saying, is in some ways they're really ahead in the UAE, and in some ways they're not quite where we need them to be to help us personally.
Yeah.
But it's really close. Like it's really, really close. Like M2 could literally be the last missing piece that we need. Like we've obviously established companies here.
Yeah.
Got our residencies.
Yeah, it's looking good.
We just need easy on and off ramps, which they could provide, even if they create a crypto card.
I was
or
going to
anything
say,
like
yeah.
that,
Last night they said the CEO, when he came up to speak, said obviously we've got plans to release our own crypto card. Again, right now as it stands, it's all words. It's all just kind of not like fake promises or anything like that. It's just kind of, this is our plan. Let's see how they execute over the next 12 months. At the end of the day, that's the way we're going to see whether they're going to be a successful exchange or not. But from where I'm sitting, it looks fairly promising.
And what do you think of the event?
The event, like going into it, I was excited. We all were. Like we heard, like Demi Lovato was performing, Black Eyed Peas were performing. We got in, really nice stage. Like everything was set up like kind of perfectly. But
we were treated well.
We were treated well. Oh yeah, of course. Like service was 10 out of 10.
Yeah, brilliant.
Like we had people there taking people's orders all the time. Like the workers there were just on job, and they were told what to do, and they stuck to it. But obviously, the event said start at 7. We got there just before 7, and they were still setting things up. It was a bit slightly.
Like, we walked into a construction site.
Yeah. It was a bit like disorganised, really. I feel like they kind of fell behind schedule massively, and almost rushed through like speakers, performers, and all that kind of stuff. And yeah, like Black Eyed Peas came out. And they had to leave because there was a 12 p.m. curfew, so they had to leave after performing for like 20 minutes.
15 minutes or something.
So it was good though. It was a good.
I can't really knock it because like we got invited.
Yeah.
I'm excited for the exchange. I would have liked to see some more announcements about the actual exchange itself.
Yeah.
It was more of like a celebration, which is fine. We got to network with some cool people. Although I wasn't feeling I had a migraine yesterday. Like having the wars at the minute, aren't I? So I'm a bit away with the ferry today because I have like medication for my migraine, so a bit spaced out. But yeah, like I thought overall the event was good, and I've got promising feelings about the exchange. But it's early days. Like we know from crypto, anything can happen in early days. Like 500 mil market cap in crypto doesn't really mean anything. You've seen multiple large crypto currencies and projects and organizations, exchanges go belly up, which are much bigger than 500 mil. So there's a lot of hurdles and a lot to happen down the road. But as far as things go right now, if you couple the fact that the exchange looks good and they're trying to do the right things with the fact that they're in the UAE and the UAE are trying to be forward looking and do the right things, and they have potentially government backing, which is what they were explaining yesterday, then those things are all coming together for something that looks promising. It's just whether they'll follow through, and like you can't say they won't, but I would never like hang my hat on that they would, because as you can see, even with Binance, like the largest exchange in the world, always going to have some sort of headwinds to run into, and it's just part of the course whether they can survive that, I think, in crypto.
Yeah, agreed. Right, so like I mentioned, there's not a lot going on in the crypto space this week, so we thought we would give you guys a bit of an insight to what's been going on in the macro environment and how this could potentially affect or have knock-on effects in the crypto space, because it's super important to stay on top of what's going on in the macro environment. Not only is it interesting, because it is interesting to see how it all works and how all the pieces of the puzzle connect almost, but I think it's something that a lot of investors in your traditional markets or crypto markets don't take into consideration as much. Like they'll just kind of read the chart, which is obviously important in its own respect, but they don't take into account what's going on behind the scenes, I'd say, because that's the best way I can describe what the macro environment is. It's like behind the scenes of what fuels the markets, and a lot's been going on. Now, a lot of it is slightly out of my expertise, so I don't want to make too many judgments on it, but I'm just learning about it. But yeah, like I said, it's going to surround. We're going to surround this discussion around Arthur Hayes' article. Start off by talking about US and China relationships, because obviously Xi Jinping. What can we call him? Can we give him a nickname?
No, I don't know. How
Xi.
you do that.
But I'm going to call him Xi.
Okay, Xi.
We'll call him Xi. Because I'm just going to keep forgetting his name. Xi. Right? Okay, Xi.
Xi.
Obviously, Xi went to San Francisco, was it last week?
Yeah.
To visit.
Week before, maybe.
Yeah, to visit. I can't remember when it was. It went to San Francisco to meet with the man himself.
Sleepy Joe.
Slow Joe, as Arthur Hayes likes to call him. Slow Joe. And he basically discusses the implications this has, are they kind of rekindling their relationship, and why this is a good thing for the markets. Now, I've got to be careful what I say because he relates it to the conflicts that are going on around the world right now, and I think we'll just kind of keep it at that without going into too much detail. But essentially stated that if China and the US are in bed together again, the conflicts around the world are a lot less likely to escalate further, kind of thing.
Yeah.
So he said that was a net positive for the markets. And what was that? What's that drug? Fentanyl, that's the one. And he was like, Xi also agreed to help stop the flow of fentanyl going into the US, which obviously saves them a lot of money. And obviously then the US don't have to fund these conflicts, which is again going to save the US a lot of money as well. And what does China get in return? They're on about, obviously, what did he say in the article? He said that over the past year or so, past couple of years, like the US have kind of implemented some tariffs which have restricted exports from China, basically. So basically saying that they're more likely to ease these tariffs, which will obviously help Chinese economy, because right now the Chinese as an economy are in trouble. They're in a lot of trouble. We've got, obviously there's a supply side driven market, and PPI is pretty much deflationary right now. So they need a helping hand with their output right now. So this could all kind of help that. Essentially, the message of the article that China are going to turn on a money printer. And obviously towards the end of the article, he went into how this capital could potentially find its way back into your risk-on markets like crypto. And he kind of said, actually one chart I want to discuss, again, pick your brain about it as well, was the fact that obviously the yuan and the yen, so obviously the yuan, the Chinese currency, yen being the Japanese currency, are obviously positively correlated because they're the main competitor of exporters, so they need to stay competitive with one another. And obviously the yen has taken a massive dip. I'll try and pop the chart up for you. And the yuan has actually still took a dip, but not as catastrophic as the yen, because they've artificially propped up the yuan basically. So saying the Chinese won't have to spend as much money kind of artificially propping up the yuan anymore. So what do you think is going on, Will?
So like, if you're just talking about an export perspective, again, remember that I'm not a macroeconomist by nature, but I have spent the majority of the bear market really not diving too deeply into crypto, but trying to get more of a macro understanding. So I definitely have gaps in my knowledge, but I've been following people like this for a long time and reading their research and just trying to put two and two together to make four in my own head. So in terms of the export perspective, like the biggest exporters of like finished goods is Japan, and then they also compete heavily with China and Germany. Also other countries like coming up behind them, but in this example that we're talking about is the Chinese yuan versus Japanese yen relationship. We obviously know that the Japanese government have like issues anyway. They've been controlling or artificially controlling their government bonds, so yield curve control for since like the late 80s or early 80s. China have had a stronger yen recently, as you said, because they've been artificially creating strength in the yen. But they've been doing this by selling down their dollar reserves, by selling off treasuries or dollar-based or US dollar-based assets essentially, and then using that money to buy back the yen through Hong Kong. This obviously creates an artificially stronger yen. They do this because basically they've got issues within China, and they don't want to make the issues look as bad as they are. So, in order to solve the problem of the issues that they've got, they need to create more credit flow in China, or like pump money into the economy in one way or another. And if you create credit within your own currency, if you're not the world reserve currency, your currency is going to inflate against the denominator, which in this case is like the US dollar. So they're waiting and they're trying, and they have been like turning on the stimulus tap a little bit in order to create growth within their economy. But they need to do it a hell of a lot more. Mm-hmm. And that is one of the reasons that, what we call him, Xi. One of the reasons that Xi went over to see Slow Joe. Yeah. Because, like you were saying, they made these arrangements, but what these arrangements basically allows you to do is print and stimulate their economy, which is what they need to do. Because as you guys know, there's been a lot of strain on the Chinese economy in terms of, well, the biggest stories like Evergrande, big retail construction company in China that everyone was saying could bring down the world or whatever. But one of the things that countries do in general to artificially inflate GDP to make the country look stronger is like they build things they don't necessarily need, which is kind of sounds a bit weird when you talk about it, but it has there's a lot of reasons why they do it. I'm not going to get too deep into it, but basically if you think that China has a surplus of like 10% plus properties in the country right now with a deflating population, so demand is decreasing. Yeah. So their housing market is basically like going down and down at the minute because of demand and surplus supply. But if they then increase credit towards property producers, it puts people back in jobs. It makes people buy, like developers are buying land and building properties again. But then also from that, it has a trickle-down effect on people like wanting to buy properties and property prices going up. But it also, like we were saying, just as I said before, it lets them artificially stimulate their GDP because they have to have a certain amount of growth in the country every year. Otherwise, they will start to collapse like financially. Yeah. So that's basically why he's gone to see Sleepy Joe or Slow Joe, because they want I don't want to say free reign, they just want to make an agreement where they're going to print a certain amount and the US aren't going to smash the yen on the inflation. Essentially is what they've probably gone to the US and said, look, we need to print this much. The US has said, okay, but you need to do this, this and this to help us. Yeah. And like a good relationship with China is obviously good for voters. So that's the other thing that we're talking about. And the thing that it would do then is give the US reign to stimulate next year. But as long as they coincide it kind of with each other, it's not going to smash the yen as a currency like completely. That's my understanding of it.
Obviously, like we spoke about this in depth yesterday on the way to the M2 event, and we related to what Raoul Powell says. When everyone prints at the same time, it has less of a detrimental effect to the currencies that aren't world reserve currencies. Yeah. So obviously, like you said, if they coincide it correctly, which is obviously what this whole meeting was about, probably the yuan isn't going to get smashed. Yeah. And both economies can kind of achieve what they're trying to achieve. Both parties, I think, is the best way to word it, can achieve what they want to achieve before their elections. Because obviously we've got the US elections next year, and the Democrats want to obviously stay in power. So they want to do a certain amount of things. In the article, he said one thing they don't want to happen is for oil to rise too high. Breaks down a lot of things. And it's a bit of a you scratch my back, I scratch yours kind of situation, I think. But he did kind of stress that this is a bit of a short-term fix to the wider problems that are going on in the world right now. Because as soon as like they've achieved what they want to achieve and they've achieved what they want to achieve as a political standpoint,
the elections come round, and then elections will come round and have gone, and then everything will change again in terms of tariffs and stuff. So the basic point. So one thing before I get onto that basic point is, when I said that they want a weak yen, so China want a weak yen because they're net exporters, so then they can obviously, the dollar does more inside China if the yen's weak, but if, the yuan, sorry, so the renminbi we'll call it, so we don't get confused. Say the renminbi is weak, but they can't have it weakening too fast because then their economy will collapse. That's essentially the issue. So they're trying to like weaken it because then they can export more for dollars within within China, but they can't have it too weak because otherwise the economy collapses and people lose faith in the Chinese market. So there's that. And then what was I going to say? What were we just saying before that?
The parties. Something about the parties?
Oh yeah, so the secondary point is that they want to have all this stimulus, like basically the US are giving them the free rein to print and do whatever they need to do before the elections next year.
Yeah.
So we've got like a window of between now and whenever the elections happen, I don't even know when that is in the US, of like China being able to basically roll the red carpet out and fire stimulus on the economy, which is going to be another positive catalyst for crypto.
Yeah.
Because some of that liquidity is going to flow into crypto because you've got the rich Chinese who want to protect their wealth. They're going to know that the yuan or the renminbi is going to devalue against the dollar, so they're going to try and protect their wealth by probably going through Hong Kong into dollar-based assets like cryptocurrency.
Yeah, because I think one of the main ways that wealthy investors in China right now can get direct exposure to Bitcoin is through Hong Kong, right? So obviously it has to be a legal way for that to happen. And
I don't think it's like technically legal in China.
Yeah.
I just think they just do it because
they just do it, exactly. But that's what he's kind of suggested within the article as well. So that's how it can potentially have positive effects on the crypto market. And then, so how do you think America are going to stimulate? How are
They're probably going to directly stimulate before the elections.
Through quantitative easing, printing.
Yeah, the stock market should probably be going up into an election year. He says, another quote from Arthur Hayes is like, was it 11 out of 11 re-elections have been won when there's not a recession?
Yeah.
And something like, what's the other stats? How many, when they are in a recession, how many get won? Not many. 4 out of 11 or something.
Yeah, I think it's like 1 out of 7 actually.
Yeah.
Something like that. But the general thesis that we're trying to...
They're going to pump the stock market,
yeah,
they're going to pump crypto.
They're going to do everything they can not to go into a technical recession, basically. And the only way that they can do that is pump the markets and make everyone feel good and kind of artificially look good, whereas under the covers, it's not looking so good.
No.
Because whatever they do, obviously through pumping money and whether it be for China and the US, which I assume will happen, it's just a short-term fix again. It's just inflating this like balloon even more before it pops, kind of thing. That's inevitably what's going to happen. But you've got to try and play your investments on their plays that they're doing. So you've got to assume that it's a short-term play. So that's why we think crypto's going up, and the market's going to go up in the short, to medium-term kind of thing.
Yeah, that's the reason why I think they're going to go up in the short to medium term, because I think we're going to see liquidity flow into the markets.
Yeah.
Like, that's what we've been looking for.
Yeah.
And the addition of the ETF, which is going to make liquidity more accessible to be able to flow into the market. So they're the two short-term factors, and why I've been calling for. I thought we were going to have a run this year, a Bitcoin all-time high before the end of the year. And I still think that's very possible if we get the ETF announcement. We're at 38k. It's like 100% from here, and we get an all-time high.
Yeah.
Which is possible with a huge pressure like that. But then long term, we've got some major structural issues that we've talked about, and we talked about yesterday in depth on the car on the way to M2, which are the issues with regional banks and government bonds, and then the further issue of commercial real estate. So they're two huge issues, and we can get into them in a second. I don't know if we're going to or not, but we can get into them. But they're the reason why I actually think that we're going to have this short-term spike and crypto's going to pump, and then what I've said is we might go sideways and work things out for a year or 2 years, and then we're going to go absolutely bananas, like the biggest crypto bull run anyone's ever seen, because I think that these sorts of things are going to start coming to the surface, and then we're seeing little league stimulant right now, but we're going to see big boy injections of liquidity when these problems start to rise to the surface. Otherwise, we see a financial collapse. And whatever people say on the internet, I honestly and truly do not believe any government in the world is going to let their country, economy, whatever, collapse unless they've used every single play that they've got in their playbook to save it. And one of the plays is going to be, if things start crashing, to put money into the system. So that's basically my thesis on it.
I mean, yeah, especially when they're world reserve currency.
Yeah.
Do you know what I mean? Like they can do so much to manipulate X, Y, and Z to help prop their economy up. So, like you said, they're gonna exercise their power basically, and that's a lot of people are kind of saying they're at the end of that. But when does that come to an end? Like when you hold world reserve currency, you pretty much control pretty much everything and your other values of other currencies in the world. If you come inside and do things and time things correctly, you can
almost.
But you can prop it up indefinitely. Yeah. Do you know what I mean? You can.
Well, to a point, until everything starts to get so over-levered against each other, and the underlying value of the asset becomes minimal when you get into like hyperinflationary stages, which can accelerate quickly, but not when everyone's printing at the same time, because you're not hyperinflating, you're just debasing currency, which is the point we've talked about. But when these big structural issues come around, the other side of the conversation though is the big problem is because we've got so much debt and not enough debt to GDP is so high. But if we can bring the productivity aspect up, which is what people are talking about with things like AI and robotics becoming a demographic, if you can kick the can down the road for long enough, you can start chipping back away at the debt, because you're not going to have people working, you're going to have robots doing the work of people, and that productivity can start to eat into the debt that's too high at the minute. So I'm in two minds. Like, one is we at some point have, either way I think we're going to have a huge bull run in like 2025, 2026, and I think that next year probably we run up massively anyway. Like, when I say huge, I'm talking like bigger than people expect. I think in the next year we're going to have a big bull run anyway. Whether that's in alts, whether that's in Bitcoin, whatever that's in. And we're going to have a huge rally in everything in the next few years when these problems start to arise, like come to the surface with the banks and stuff. But then if you can kick that can down the road for long enough, you can start to chip back away at that debt, because you're going to have robotics and productivity chipping away at the excessive debt, because you're not going to have people working, you're going to get the same amount of output.
Yeah.
So people could argue that we can have a crash then. I could see that. But the crash might be different to how we've experienced in the past. Like, people compare it to like the roaring 20s and then the depression in the 30s. Is it the same or isn't it the same? Like, it might be a crash in terms of fiat value, but we might transition all that over to a digital age, like we've talked about.
That's what I mean.
We could push all that debt onto another ledger and another age, and then on a technical level, it might look like everything's crashed, and it has in the old system.
Yeah.
But then we've got a new system that we're using, which is powering robotics and a whole new system together. Yeah. So, like, that's all up in the air for me. Like, I think that anyone making projections of like 5-10 years right now is going to be heavily surprised by what's going to happen in the future, because we're having so many breakthroughs right now that are all complementing each other. You got crypto, potentially a new financial system that we've not seen obviously in 100 plus years. Actually, maybe even longer than 100 years, because we've never had digital payment rails ever. Yes, we transitioned from like trade or barter to like shells and then to currencies, but now we have a complete, potentially real-time value transfer system with a world that's connected to each other on top of an information layer. And then on top of that, we've got AI, potentially even AGI, that's been maybe invented in the last few weeks by OpenAI. And then what does that mean in terms of production of like robots and things that could do jobs for us? Like, the next 5 to 10 years everything could change super quick, or not a lot could happen. So trying to project out even 2 years is almost impossible. So the short term, I think we have that, and that's what I'm looking at. And then that's why in the long term, like, there's so much potentially going on. But the short term, we've got liquidity coming into the market, proved by China, then going to be backed up by the US, and best believe that people like the UK and Europe are going to be looking at those things, those like other countries stimulating and saying, oh, well, if they're doing it, like, we've got issues as well, so we may as well just get it done.
Yeah, I mean, this might be a slightly naive way to think about it, because it's not really my area of expertise, but like the way I see it is, you know, all these countries, well, the US in particular, just, like you said, kick the can down the road, and will continue to print to prop up their economy, which has positive effects on markets, until the point where the traditional financial system does inevitably collapse. But if you're invested into digital currencies, is that a bad thing for you? Because the next system, I don't think you can dispute that the next system isn't going to be obviously on the blockchain and digital, because for me anyway, obviously it's a no-brainer. I think that's coming regardless. So are they just so if you are invested in crypto, you're going to benefit from them propping up their currency because it's going to provide a lot of stimulus into the markets. And then more of a long term, obviously, I don't know when this is going to happen.
It could be 100 years.
It could be.
Like, it genuinely could
That's
be
what I
100
mean.
years.
But like when that happens, it's going to be net positive for you anyway, because as the fiat system kind of crashes and starts to get phased out, and everyone does start to transition to the blockchain or digital currencies, then that's good for your digital investments. Like, that's the way I kind of see it. And again, I could be completely wrong. I could be really naive saying that because I'm not really well versed when it comes to macro and how things work like that. But that's from where I'm saying. That's what I think will happen. But
I say it could be 100 years in regards to like a crash, and people might look at this video and laugh at that. But realistically, if I'm right that they can just keep kicking it down the road, and they have been doing that for the last like 30 years anyway, and they are accelerating that. But if everyone, like I said, is debasing at the same time, all that's happening is currencies getting weaker. If they keep doing that to an extent, it's going to have to slow down, because otherwise it's going to hyperinflate, and that's when there could be an issue. But if they can, it's probably going to speed up for a little bit while we try and still like work out COVID, the wars, all this sort of thing. But as soon as we start to get some extra productivity, it doesn't have to come all at once. They can just slowly taper it down. It's not like, and everything's tied to each other, proven by the fact that China are going over to the US because they want to stimulate. Everyone's like, oh yeah, it's going to come down because BRICS this, and the dollar's going here, and this is going to happen, and like doom, doom, doom. If she's going over to the US, even in the short term, relationships aren't as bad as what people say. And that's proof that everything is connected. So it's not like the US are going to let the Chinese markets go down, because where do you think a lot of the US investors buy all the goods from for the US? Where do you think like US people invest money? Where do you think Chinese people invest money if they think the US market's going to go down? Like, everything's interconnected, and it's more complicated than it was in the past. And all the central banks communicate with each other. They all go, oh, actually, every 3 years we need to refinance our debt, so how are we going to work this out? Things are happening for a reason all around the world. Like, the conflicts and stuff, I don't want to get into, I don't know too much about. Is there political posturing behind it? Potentially, but I don't really know. But what I do know is, and that's proven even by Xi going over to see America, is that all these economies are really, really interconnected, more than anyone thinks, and that whether China are trying to come up behind the USA and take power or more power or whatever, it's not ready yet. No. It's not ready yet, because they ain't going to be going over there to negotiate terms and make better peace with them. Even if it's for 6 months, and then we reassess again in 6 months, we're still connected for 6 months. Yeah. And like...
Sorry, I don't want to talk, but I think what people forget is that everyone sees China versus USA, but what they forget is they both need each other to do well. They both need each other to prosper, because they're so heavily reliant on each other in different ways. And it's not really a war, it's more of like, it's in their best interest to work with each other, if that makes sense, for their economies to flourish, because China backs against the wall right now. Obviously, everyone knows that. But also the US are in trouble with their banks and all that kind of situation. So they also need to pump money into their economy. So essentially they need each other, and people are just, the only thing people are seeing right now is a potential collapse. But
and look, if we talk about Ray Dalio's changing world order, China are the rising power into the US. But realistically, what's happening within China is just as bad, if not worse, as what's going on in the US, because they've got the same economic problems that the US have, apart from the fact that they've got more of a population, less of a financial backdrop, and have been pushing harder to try and grow out of poverty, to try and grow. So they're more fragile, because they aren't the world reserve currency. So Xi Jinping makes a bad move, and their economy collapses, and then the people of China will revolt against Xi Jinping. This is one of the things he talked about. It's like one of the issues that he's got are that he can't piss the people off, because they're going to revolt, because they're getting poorer just like the people are in the UK and the US. The regional banks have got potential issues because their loans, and they can't grow basically at the minute, and the central bank don't want to stimulate too much, because then everything's going to collapse basically. So he's in just as bad a predicament as what the US are in and what the UK are in. So even though he is rising to try and whether you believe that or not, he's rising to try and maybe take some more power off the US, if he puts a foot out of line, he'll be out.
Yeah. People forget that they don't take that into consideration, do they?
No.
They just think China can magically just swoop in and just overtake US like that. But it's as it currently stands, without the help of the US or working with each other, it's pretty much impossible.
Yeah.
Like, they can't just do certain things and completely overtake the dollar like that. It doesn't work.
And that's exactly my point about like the financial collapse. Is everyone is tied to everyone. So if we have a financial collapse, everything will go like we don't know what that means.
Yeah.
And like I'm not saying it's impossible. History tells us it's very possible and actually highly likely. So I do think it will potentially happen at some point. But will it just happen like optically, and will we move over to a digital system? That's where I think at the minute, because I don't think everything's been as interconnected as it is right now.
No.
So that's basically my thoughts on that.
Yeah.
Like our big catalyst that we could get into are obviously the US banks.
Yeah.
In terms of commercial real estate and treasuries, but I don't know if we're going to get onto that.
I don't think we could speak about that next week, but I feel like I need to personally do a bit of background reading into it because I want to come well versed into that because it's tricky. It's tricky. Like there's a lot to take into consideration, and this is why I've said in previous episodes that when you're investing into whatever market you choose to invest in right now, you can't just be so fixated on like crypto, for example. You can't just be so fixated on crypto news and crypto technical analysis. You really do have to be paying attention to where that liquidity is coming from and when it's going to come into the market, so you can time your investments correctly. You know how much liquidity is coming into the market, so you can set your price targets and forecast where you think your investment could potentially go. So it's super important.
Yeah, and we said literally our finishing statement yesterday, and probably maybe a good one for this, is that you use macro to make your long-term thesis.
Yeah.
And then from your long-term thesis, you decide everything else.
Yeah.
And that's what Stan Druckenmiller, I think, says, but he may be one of the exceptions to the rule where sometimes he actually does trade against his own thesis for a short-term window, but basically that you should, or like in technical analysis, for example, you shouldn't trade against the trend. You make your own trend and your own thesis and you trade within that.
Yeah.
And like you use the day-to-day, the week-to-week, month-to-month to find your entries and see if things change. But if you zoom out and you have a specific perspective, don't bet against yourself. Raoul Powell says that all the time with his investments. He's like, look, when this has been my long-term thesis, if I'd stuck to my thesis, I'd have made more money. And if every single time we dipped, I bought, I'd have made 20x more.
Yeah.
And that's because he's got a long-term thesis that he uses macro to basically create. So that's my like thoughts on the markets in general. Is like, I'm a bull. And I've said that I was a bull for months and years and whatever. And they've explained the reasons. The short-term noise is short-term noise. And like, yeah, you could be wrong because someone might come and regulate crypto out of existence. That's about the only thing that we could possibly see now, in my opinion. But my reason is there for why I'm long. And I think that the other thing is whether an ETF is going to be a buy the rumor, sell the news event. But I think a lot of people think it might be. But because they think it might be, it might not be.
Yeah, I know.
Which is like a bit of a, because you think that, and a lot of people, whatever the majority of people think, it's normally the opposite. So a lot of people now are saying it's going to be buy the rumor, sell the news, which makes me think it actually might not be.
Yeah.
Because everyone's expecting, ETF comes out, we're all going to dump on the day because BlackRock are going to dump on us. If everyone thinks that, it isn't often right.
Yeah, that's a tricky one. I guess that's a topic for its own. Because people speak about that for ages. Because we've not really experienced a major spot ETF like that.
We've never in crypto, but in gold we have, and you can say that it took us in a 8-year bull market.
So there's always two ways to that story. So if you're sitting on one side and you're so seriously like fixated on your narrative, then you need to open your eyes, I think, a bit more. But
it's exactly the same point we're just making. Actually, just don't get obsessed with short-term price action. Have your thesis and let it run.
That's it. But there's so much to take into consideration. Just got to stay on top of it. But I think.
Actually, can I say one more thing?
Of course,
before we finish. We talked about liquidity coming into the markets.
Yeah.
And I was talking to you in the car. This is completely unrelated. It's about XRP.
Yeah.
XRP's height against Bitcoin was like 0.00024 XRP per Bitcoin. Right now, if XRP did the same move that it did in the past and reached its high versus Bitcoin, XRP would be at like $9.
Yeah.
If Bitcoin goes up to like 45k, XRP would be at like $10, $11. And so if Bitcoin goes at 7k, and if you think that like in the 2017 run, when Bitcoin broke out of its key resistance level, which is like around right now, that's when XRP actually caught up with Bitcoin. In a few weeks, it did that, moved up to that perspective again, to that market cap against Bitcoin. I made a tweet about it a few days ago. That is when we could see XRP potentially catch up and alts catch up. We could have a big alt spike in this window that we're waiting for an ETF, or if we get some big bullish news and everything starts ripping, alts like take the lead for a bit, that's when you could see really high numbers out of XRP.
So essentially you're saying right now XRP is severely undervalued versus Bitcoin, and when Bitcoin does breach certain resistances in the past, that's when XRP makes its late move.
Yeah.
XRP is notoriously known for being a late mover, and when it moves like that, so you've missed a move.
Historically, XRP has broken out when Bitcoin has broken through resistance levels, key resistance levels, or when Bitcoin's broken all-time highs. We got those taken away from us last year in the last cycle. Oh, pardon me. We got this taken away from us last year in the last cycle, but the cycle before, that's what XRP did.
Yep.
And it took around a 20-21% market share at the peak of the crypto market cap in general. And then on the second push, it took about 19%. So it did it twice in the 2017 cycle.
Yeah.
If you took about 20% of their market cap now, we'd have a $9-10 XRP. So, and I'm not saying that could happen tomorrow, but if you look historically, it happens in the space of a few weeks. Yeah. And that's why I've been trying to really, with my XRP blast off charts, I basically took the amount of time XRP has lagged Bitcoin's moves and showed TA as why I'm bullish on XRP. And I still think we're ready for some sort of takeoff. People aren't going to believe it because they're emotional. Whatever. I don't really care whether you believe it or not. Yeah. Showed you technicals, five years of consolidation, more than most cryptos. It's held through big FUD. There's an explosive move coming. It's just when.
Just when. Don't miss it. Because when it moves quick.
Yeah, 3 weeks it could do everything it's going to do for the whole cycle.
Exactly. So what it's done in the past, we're just basing it on historical figures right now.
It's just facts. It's not there's nothing more than that.
Yeah, that's fine. But yeah, I think we can wrap this week's up.
Thank you for tuning in.
Thank you for tuning in as always. And until next week, we'll catch you guys later.